Happy Tuesday, ladies and gentlemen. Today is a fabulous day to have a fabulous day. The reason being is because we woke up today and we were able to hit the live button so that we can connect to you all, just the little things in life that we are super grateful for. So today's live, we want to go over banking basics. And basically this is going to be all of the questions that we get all the time about trying to get started with banking. How do I set up banking? How do I do this, that, and the other? So we just wanted to take a step back and instead of talking about some of the complex things that we may talk about, just talk about some basic stuff.
Yeah, because at the end of the day, what we want to do is have a solid foundation.
Yep.
That's one thing that we can say we talk about a lot, is having a solid foundation. And a solid foundation, our understanding of the who, what, when, where, and why
of banking.
So
if you have joined us, thank you all very much. Let us know who you are and where you're from. So if anything, what I was going to say is before we jump into that, Darius and I, we always say own your own lifestyle or someone else will. Mm-hmm. And when we say this, we mean it in so many different facets of your life, not just from a financial standpoint. So Darius, I'm curious, since the last live that we've done last week, what's one takeaway that you've learned that doesn't necessarily have to do with money?
Taking time for yourself. Ooh. It's really important that you take time for yourself, because if you are grounded and have just have all your gears going and lights on in all the rooms, then
up here.
Exactly, you'll be in a good position to help someone else.
I think that's very, very important. It's something that we don't do a lot these days. I don't necessarily mean us, I'm just saying as a whole, as a society, is we just get caught up in so much of the riffraff of what's going on in the minutia, and we don't take for a moment, stop and think, okay, how can I heal myself? How can I make sure that I'm the best person that I can be, so that I can be the best person for my family?
Right.
So I totally resonate with that tip. For me, I would say, talking about healing, we watched a Netflix documentary last night called Heal, H-E-A-L, and it was just about the body and how the mind is so powerful and instrumental on healing yourself. And so for me, the biggest takeaway was we always talk about being in check with your mind when it comes to your money and what is the relationship that you have with your money. But it takes it to a whole nother level of realizing that you really can be in control at any given time in your life, as long as you have a healthy mindset. Mm-hmm. So that's the biggest takeaway that I have. So in terms of prioritizing yourself, like Darius says, and then making sure that you're feeding yourself, you're feeding yourself with digestible content that will feed your soul. I think that's all that you can do.
Yeah, one thing that going back to finance, wealth is a mindset. And the reason why I say that is because when you take a look at somebody like Bill Gates, Jeff Bezos, we all have the same time in the day. We have 24 hours, yes, but yet they do something different with their time to put themselves in a different position financially. Mm-hmm. So the only difference between us and them is what we have going on up here.
That's the only difference.
So wealth is truly a mindset, I think.
Check out the shirt. Wealth, again, Swag Nation. If you want to look up swag, it's in the description. So let's go ahead and we have some notes here. That's what I'm looking down. Let's go ahead and tackle some of these frequently asked questions that we get. And again, it just all has to do with banking basics.
Mm-hmm. Yeah. So since we've been doing videos, we've been getting a lot of questions. And one of those questions is, can I do infinite banking after retirement?
Yes. So absolutely you can. And if anything, we just want to encourage those who are baby boomers or even older than baby boomers, we're talking to the 50 plus crowd. Mm-hmm. The whole thing that we want to drill into your mind is, do you plan on are you not going to spend any more money? Do you not plan on making any more money after retirement? We hope not.
Yeah. And if the case is no, then you can do banking.
Exactly. You should do banking.
You're doing banking anyway.
Yeah.
Anytime you put your money in the bank, take your money out, you're doing banking.
Exactly. So don't ever look at your age as maybe a restriction why you can't get involved in anything.
Mhm.
It doesn't matter what it is. You should still be trying to dunk basketballs. You know what I mean? Like that the world is your oyster. So when it comes to banking, again, if you are using a bank for withdrawals and deposits, absolutely banking is for you. And if anything, during retirement, if you haven't set yourself already for cash flow, you should be really looking at what are your amazing opportunities for cash flow to sustain your retirement so that you don't outlive your money.
Right. And one thing that I'll go back to is when we were learning the concept of infinite banking, when we would go to the seminars, we were the youngest people there.
Mm-hmm.
Everybody else were retired baby boomers, people
Mm-hmm.
with money.
Mm-hmm.
And what I learned is most of the wealth resides in people 60 and up.
Yeah.
The most millionaires are 60 and up.
Exactly.
So with that being said, most wealth is lying in that age group. Then of course, infinite
Cheers
banking,
to you.
infinite banking or banking is for you.
Mm-hmm. Come on over, do it. Don't be afraid. Again, when you're thinking about banking, regardless if you're 70 or if you're 25, if you have money that needs to be moved, you should look into creating your own banking system. That's all we're saying. So the next question that we get all the time is what companies are good for banking?
Yeah. So there's a variety of companies that are good for banking. I'm going to give you a list right now, not in any particular order. But the very first one is New York Life, Security Mutual of New York, Mutual Trust Life, Mass Mutual, Penn Mutual, Northwestern Mutual, Ameritas, Guardian, Ohio National, Lafayette Life, and One America, or AUL.
Mm-hmm.
Those are the list of good insurance companies to use for infinite banking.
Yeah.
Now, they are varying sizes. So you have large companies to smaller companies. It doesn't matter as long as you have you work with a good agent.
Yeah, and with this, Darius said all of the companies. When we're not live, you can play it back so you can listen to it again. But we want to give you this list because we give it all the time, and we're not necessarily sharing who we work with intentionally. Is because for us, it's not about the insurance company.
Mm-hmm.
It's never about the insurance company.
The insurance company sells insurance and they want your money.
Yeah.
Plain and simple. They're just selling a life insurance policy.
Mm-hmm.
What you do with it is the infinite banking piece.
Exactly.
And the difference between insurance companies, Carmen and I was talking about this earlier, is like Nike, Adidas, Reebok. They're different companies, but they do the same purpose.
They all sell shoes.
They all sell shoes. Now, the person wearing the shoes may make those shoes seem a little different. Like if LeBron James put on a pair of LeBron James versus me putting on a pair of LeBron James, we'll get different results, but we're wearing the same shoes. So it's the same thing with the life insurance company. They have a ton of people that have life insurance, but people utilize these tools to do different things or get different results.
I didn't mean to laugh so hard about that, but it was an amazing analogy, fantastic analogy, because we find that people just get so stuck in the minutia.
What insurance company? I'm doing all this research for the insurance
and analysis
company.
Paralysis, and we're like, if you don't just make a decision. I'm saying that lovingly, but really, any mutual insurance company, mutual dividend paying whole life insurance company can facilitate these products that we're talking about.
Mm-hmm.
The common denominator that you need to be asking is, what agent can I work with that will set me up for success? Because really your hands are in the agent's hands. Your well-being is in the agent's hands, because they need to be able to know how to design a policy with maximum cash, understanding the growth year after year after year, not just for the first 5 years. We're talking about long-term. So for you, the question that we want you to ask people is, do you bank yourself?
Yeah.
How have you been banking? Because it's different, again, for you to work with an agent that says, oh yeah, I can design a policy. What have you done with it?
Mm-hmm.
That's what I want to know. What have you done with it? Because when it comes to those times where you're going to be like, I need to take a loan. What do I do with this loan? How can I maximize my cash value? Is that agent going to be able to walk you through it, or are they just going to be able to design the policy and that's it? So for us in our journey,
or you can just make mistakes like we did and figure it out along the way with bumps and bruises.
You can do that if you prefer. But again, for us, like we said, it is about the agent. It is about the agent. It is about the agent. The security, the mutual insurance companies, all of the mutual insurance companies, for the most part, have been around for at least 100 years. Mm-hmm. So they're okay. They're okay.
Oh, and then when we get to what company performs the best, this one has a higher cash value or a higher dividend. At the end of the day, they're all playing by the same rules. So what happens is
same rules and regulations.
You may have a little more cash value in the beginning in one company, then it taper off, or another company you have more cash value in the middle. You have a bell shape where it goes up and then goes down. Mm-hmm. Or you may have one that performs better in the end.
Yeah.
You have some insurance companies that may have a higher dividend, but they don't. They're not a performing.
Yeah.
What do you call it?
The longevity. The longevity isn't there.
No. I'm talking about the dividend. It's when you get a loan and then they reduce the amount of dividends you get.
Why is it escaping me? It's going to come to me. That they hold the percentage of a loan. Oh, you guys help us. You know what we're talking about here.
So since we're doing a live, we'll come back to
it. Exactly. We'll come back. It's going to come to me. It's going to come to me. But basically, what we're talking about is it all comes out in the wash.
Yeah.
So you're either going to have a few $100 more in the first year, or you're going to have a few $100 more in the latter years. So it literally all comes out in the wash. So we don't want you all to be so focused in analysis paralysis where all you're thinking about is the company and the dividends and the cash value. Because again, LeBron James here, are you going to be dunking? And what's your free throw ratio like? Are you actually going to be using this thing, or are you just going to have it be sitting up on the shelf, not doing anything for you?
Mr. Johnson said I'm good for 2 points.
Perfect. So if that's the case, you need to make sure that, again, the questions that you should be asking yourself are, who is the agent that I'm going to partner with to make sure that they design a policy for me? And then the second question you should be asking yourself is, what am I going to do with the money? Mm-hmm. Because all of the returns are roughly the same. All of the dividends are roughly the same. What are you doing with the cash?
Yeah.
Infinite banking is, what are you doing with the cash? Not, let me focus on the insurance
life
company. Exactly.
And at the end of the day, you don't invest in the life insurance company.
Mm-hmm.
Insurance is not an investment.
Mm-hmm.
You might use the cash value to invest, but the insurance piece is not an investment. So what really makes the difference is what you're doing.
Yeah, exactly. And I just saw really quickly, Craig was saying, are there specific people that specialize in structuring a policy? You're looking at them.
Yeah.
What I would say is that there's a few different ways. Just go on Google, look online. You're already on YouTube. When you see people, when you type in infinite banking in the search, reach out to them and just find out what they're doing and how they're doing it and how they're personally applying it. Because those are the people that you want to surround yourselves with, not just agents who can design it.
And honestly, guys, if you don't want to get a life insurance policy with us, then go with another agent that you feel more comfortable with.
Yeah.
The idea is for everybody to be successful, like really understand that the banks and financial institutions are putting us in an awkward position. And we can see this every single day when we look at our just debt as a nation. Mm-hmm. So we need to get better as a collective group in a country with how we manage our debt.
Mm-hmm. And chat, you fell right into our trap. You said, is there a certain insurance company that we recommend? We said, no. We gave a list of about 15. So any of those 15 will work for us because we know how to design the policy. The question you should be asking, sir, is who should I be partnering with to create these policies?
Right.
Because the insurance companies are going to continue to perform and continue to do their thing. You need to make sure that you're aligning yourself with someone who knows how to utilize the policies in a certain way.
Right.
So we've exhausted that. But again, think about your agent, think about what you're doing with the money. The life insurance companies will always be there. Okay, so the next question that we have is, can we help you get a policy? Absolutely. Darius and I are both licensed life insurance agents. So, and we have a team behind us that's also helping sell life insurance policies as well, who are all up on the concept, who are our personal confidants and a part of our team and strategizing and making sure that we're continuing to push the needle forward when it comes to the world of creative financing. So absolutely we can. One thing that I would just say though is be respectful of everyone's time, not only just ours, but anyone that you may be speaking with, because I can't tell you how many times we get people who say, like, for example, let's say Darius and I aren't affiliated with each other. I can't tell you how many times people will go with Darius and say, hey, I'm working with Darius. Carmen, can you review the policy? No, Darius can review your policy for you because he's the agent who wrote it. So make sure that if you are trying to work with somebody, that you have confidence in that individual, right, and you're not trying to seek second and third opinions because of anything. That's just a red flag. So for us, this is the only thing that we do. We don't sell annuities. We don't sell assets under management where we're not in the stock market. This is our livelihood. This is our thing. Right. And so we take full ownership of it. So again, you should be working with people who consider themselves specialists and respect their time. Right. So if you're going to be working with a different individual, go work with them and don't expect that everyone else is going to come and help make sure that you're making the right decision. Definitely watch everybody's YouTube channel. So. Yeah, because you got to learn. That's all you got to do. But absolutely, if you want help in getting a policy, then if you click on the link below in the description, you will be forwarded to our masterclass. And our masterclass, again, is just an opportunity for you to ensure that banking is everything that you want to do. Is everything that you want to do. And we answer even more questions in this masterclass to make sure that you're making the right decision for yourself. And then if this works for you, then you'll be forwarded to complete an application where we gather all of your information and you'll be able to meet with a member of our team. So it's that easy. That's how we work with you, and that's how you get in contact with us. Now, there's a few questions on what is the least amount you need to start. And I'm going to answer that question because I just have an analytical brain. But when creating a policy, what you want to take into consideration is your age and, of course, your health. The worse your health, direct recognition. Thank you. That's what we were looking for. I'm going back, direct recognition. So let's break that down. The earlier we couldn't think of direct recognition versus non-direct recognition. And what we're saying is with some mutual companies, if you get a loan, calling it direct recognition, they are directly recognizing that you have a loan, meaning that they're going to hold a percentage of your cash availability until you pay the loan back. Now, versus non-direct doesn't hold a portion of that dividend. So it's important for you to make sure that you know that. Now, on the flip side, what they're able to do is they're able to illustrate a higher interest, higher cash value on their policy. At least that's what I've recognized with all policies, thousands of policies that I ran. Yeah, because they're not going to factor in on the illustration the amount of money that might be withheld from the dividend. Because again, if you have any outstanding loans, they're going to withhold a portion of the dividend, small portion, not that big of a deal, but it's still just something that you should know about the company. It's not a game changer, but it's just something that you should know. Yeah. Thank you, Ricardo. Really appreciate it. You're on it, my man, Ricardo. But as I was saying, when it comes to starting a policy, what you should really consider is your age and, of course, your health. The higher your age and the worse your health, the more expensive insurance is going to be. And when it comes to creating a policy, you have to have a foundation. What we like to have is a 100,000 foundation, 100,000 in death benefit, because on top of that, you can build the cash values and whatever perks and things, riders that you add to it. You have to have a solid foundation. And what $100,000 gets you normally in a insurance policy with a mutual insurance company is 121 years. Yeah. Now, the difference between 121 year life insurance policy versus a 95-year or 100-year is the fact that 121 is the cheapest insurance that you can get because it's over a longer period of time. So when it comes to the minimum amount that you should start with, generally what we like to say is 10 times your age, because
for most people, what that allows us to do is to have that foundation of $100,000, and anything else you want to build on top of that, we can do it.
Yeah. So 10 times your age. If you're 30 years old, $300 a month, 40 years old, $400 a month, and then just times that by 12 if you want to pay it up for the year. So just a heads up with that. Now, the main thing is we want to make sure that you are not stretching yourself. Please, ladies and gentlemen, we are always going to direct you to make sure that you get a premium that you're comfortable with, that you are comfortable with. Even if it's $50 and you're like, I think I can swing it, don't swing it. Because if this is your first policy, we want to make sure that you are snug and cozy up in that policy and that you're not going to have any issues maintaining it.
Yeah.
So try to get a base hit. You know, do what you got to do to make sure that you're in the motion, you understand what's going on. And then as you start to accumulate more cash flow, then we can work through different options for your banking.
Yeah, have your personal finances taken care of before getting involved with banking.
Yes, like we said last week. Yeah.
Yeah. So if you save $500 a month, then that's cool. Make sure you have a good 6, 7, 8 months worth of that habit before getting into banking, because what you're going to do is just start directing those savings into your life insurance policy. So it's really important that we have a habit before starting banking.
Exactly. And shout out, Mr. Denzel Rodriguez has joined
Denzel
us.
Rodriguez.
What up, Denzel? We need our little hype horn going on. Love you, Denzel. Thank you for hanging out with us today. If you all do not know Mr. Denzel, I'm sure you do, then definitely go to his channel after this video so that you can learn about Velocity Banking and continue your creative financing endeavors. You like that commercial, Denzel? That just came off the cuff. Okay, so let's see. What else are we talking about? Patrick Joyner said, should I pay the loan or the premium?
You should definitely pay the premium, because you can pay that loan, and what they'll do in most companies is they'll take a portion of that to make sure you maintain your minimum base premium on your policy. But I would pay the premium, because you can pay the loan back anytime. Without the premium, your policy is going to be gone.
Yeah. And Patrick, I want to be with what Darius said. You should always pay your premium, because that's going to keep your banking system going. But you need to pay both, brother. Both, right? Because if we're in the habit of paying ourselves, keeping the banking system going, granted, you have more flexibility when it comes to paying the loan of when you pay it, but you need to make sure that you pay both, because we get a lot of people that get into trouble where they take a loan and then they never pay it back, and then they're just paying interest every single year, and now this thing becomes an expense to them. So make sure that you go into this with the right mentality of realizing that the premium is something that I will forever be attached to, and knowing that I have the flexibility to create my own banking system that I will continue to pay myself with.
Right. Now, there was another conversation that we were talking about when it comes to understanding how the banks are able to offer 0% interest.
Yeah. Go ahead.
Like, if the banks are offering 0% interest, why in the world would I borrow 5% from my bank? Well, when it comes to banks offering low interest rates, that means that someone's paying high interest rates. So what the banks have become masters at is stacking interest rates on top of each other so that they can pass the benefits on to someone else. Now, we can do the exact same thing with our policy when we stack interest rates. So if you were to go back to our credit card video, we were paying about 6 credit cards at the same time, which means that we were stacking interest rates. Now, because we have stacked interest rates already, we can pay ourselves 0% interest and still make money, because we are overcompensating on someplace else because of the high interest rates that we're paying on other bills. You can do the exact same thing in your business. Your banking system is, when you are able to stack the interest rates, then you can benefit from keeping the money in motion by offering 0% interest or less than 5% interest and still making money.
Exactly. Mr. Luna is saying, can we put our grandchildren on policies? Yes, you can, sir. But just to make sure that we're on the same page, the insurance company likes to see a hierarchy that's followed. So they're going to first and foremost want to know if the grandparents have life insurance, then the parents, because they want to make sure that we're not jumping generations. And we can jump generations if there's a reason for insurability. But first and foremost, you need to make sure that the grandparents have insurance, then the parents, and then we can look at the grandchildren. So I would say that's the rule of thumb. That there's ways around it and letters that we can write, but that's just what we want to make sure that you understand first and foremost. So let's see. Some companies offer discounts on the premium when you pay the whole year. Absolutely.
Yes. When you pay a monthly premium, every single month you make a premium, they have a processing fee.
Yes.
That processing fee is reducing it's a small amount, but it's taken away from the amount of money that's going into your actual policy, your premium.
Exactly. So I think the main thing to note with anything, right? This isn't just insurance. You get a discount when you pay it up front. So if you pay it for the year, go ahead and do it. But if you can't, it's not that big of a loss in the end.
Yeah.
So also, another shout out for Mr. Denzel. We did another video collab together. It's coming soon in the upcoming weeks, and it's going to be on Denzel's platform. Excuse me. It's going to be on Denzel's platform. So check that out in the few weeks to come. I know I'm good. Just get my water. Okay, let's see. What else is it? Is it necessary to make your policy 1090 to make it successful for IBC? No.
No. Now, the thing with the 1090, real life.
Get it together, Carter. Get it together.
The thing with the 1090 is you still have to have a lot of money in your base premium in order to make it work. So let's say you're my age. You can't start. I wouldn't be able to start a 1090 split with $3,000. It's just not going to work. So when it comes to having a 1090 splits, you should just make sure you have money to put into it, 20 grand or so that you can have that decent foundation, because you still want to have $100,000 at least to build your term and all that stuff on top of. And then you want to make sure that you have it on there pay the entire premium for about 10 to 20 years. Yeah,
when we're talking about splits, this individual is basically just talking about how much
base premium versus cash value.
Yeah, how much we're putting towards it. And if we're being honest, none of our policies are 1090 splits, not one of them. The reason being because for us, longevity wise, we need to make sure that there's enough foundation built, that concrete is laid and poured and dried before we start stacking stuff on it. So when you have a wobbly foundation, it's really important to know long-term how this could affect you, because you could miss one premium payment and the whole thing come crashing down. So we can talk about that more in detail, but again, understanding the numbers, make sure that you see the comparisons, because sometimes people see that they have all this money up front in the first few years, but then again, it all comes out in the wash, like we said before. You're going to have roughly about the same amount of cash value long-term anyway. So you want to make sure that you have a policy that's designed for your specific needs, and everyone's policy, at least for us, isn't always going to be the same. So this isn't a one-size-fits-all deal.
Yeah, one thing I would say is the reason why our policies are the way it is because when we learned this process, we learned it from very, very, very wealthy people.
Yes.
And one of the things that they focused on, at least the latter parts of their lives, is wanting to get the most death benefit for their grandchildren.
Yes. For the next generation.
Yeah, they were finished with the cash value. They were like, I have more money than I need, but what I want to make sure I do is pass on a huge amount of money to the next generation into our trust. Because this one guy was telling us he had like over 400 houses, and he was saying that I want my grandchildren to be traveling in helicopters.
Like, okay.
Oh, okay.
Us too. So what was that? How you do that one thing one more time? So if anything, yeah, we're modeling everything off of the very successful people who are doing it. And additionally, the late, great Nelson Nash. Our policies are designed based off of Nelson's principles. So those are some other things just to keep in mind.
Yeah, which is another reason why we don't use indexed or universal life for policies.
That's another question that we get. Do we use universal life, index life to do infinite banking? And the answer is no.
Yeah, it looks good on the illustration, but what you want is the guarantees that you get with the whole life. It's a nice, steady growth, regardless of what the market's doing.
Yes, because the fact of the matter is whole life insurance provides a guaranteed rate of return. There are no guarantees in IULs or ULs. So when you're trying to build a banking system, again, think about that foundation. Do you want guarantees or do you want maybes? And for us, we want guarantees, because we don't want our cash flow to be affected based off of whatever the market is doing and our investments are doing. We want to make sure that our cash flow is predictable and solid year in and year out.
And at the end of the day, if the bank banks start buying index universal life policies, then it's probably a good idea. We are definitely following what the banks are doing because they have the money. If they start buying universal and index, then it's time to buy index universal.
Exactly. And what Darius is referring to is, if you don't know, the banks are the largest purchasers of whole life insurance. They have billions with a B of cash value in whole life insurance. They are not buying IULs. They're not buying ULs. Again, because of the volatility, they need steady stream of income in order to build on top of that banking system.
Yeah, universal index are for us as consumers, because we see these shiny objects of having a ton of money, ton of cash value.
We see the average. We can get 10%. Again, it's not guaranteed.
Exactly. Bet on yourself.
Bet on yourself. I got it. Be your own bailout, like we were talking about. Shout out to Drew, one of our clients who came up with that phrase, be your own bailout, be your own bank, go into your own banking system to do your financial endeavors.
Right. So we have been on for 30 minutes, and what we just want to leave you with is what we plan on doing for the remainder of the week. We did another interview with VIP Financials, Mr. Matthew Pillmore.
Yeah, we're really excited to launch that. That'll be coming out on Thursday, so look out for that. But for us, again, when we're talking about Wealth Nation, you really need to understand what's happening with money, what's happening around you, so that you can build your own destiny and have confidence in it and faith in it. And so we're bringing a lot of these thought leaders to you through our channel, because we want to make sure that you don't just hear it from us. You hear it from other like-minded individuals who are doing amazing things in their field. And if anything, this just gives you little nuggets that you can pull from everybody to figure out how you can build the biggest, baddest house, literally and figuratively, that you can.
Yeah, and don't just take our word for it. Take what we say and go and do the research.
Yes. Confirm everything that we said again, because if you're going to own your own lifestyle, you better be able to back up all the knowledge that you're able to source that's going on online.
Yeah, absolutely.
One more thing. Let's see, Sandy. How are you, Sandy? It's been a minute. If one has
Hi, Sandy.
Savings of $10K, can it be used to purchase a life insurance policy of $10K annually and borrow the money to pay the mortgage? Yeah, it can. So what I would say, and this is for anybody, you have $10K in the bank in savings and you want to use that to pay your premium. My question to you then would be, are you going to have $10K every single year consistently to pay for that premium? So you can totally do that. But if the answer is yes, get you a $10K policy, girl. If the answer is no, then maybe cut it in half, make it a $5,000 policy, or maybe cut it in fourths, whatever you got to do, whatever your minimum is, so that you can make sure that you have several years paid up front.
Right. What you don't want to do is empty out your savings account and then need that money the following month.
Yeah. Always make sure you have some liquid cash.
We're not talking about robbing Peter to pay Paul.
No, we're not. Yeah. So I would, if anything, again, the foundation, what does your foundation look like? If you pull from your savings, does that rock the foundation, or is this going to make the foundation stronger? So I think that is everything else. When is the next time we're doing a live? Well, Chad, you know what? This is the second Tuesday that we've done it. We're just testing the waters. So I think you'll see us again next Tuesday. We're just seeing how how it's going. If you guys like it, and it looks like you guys are liking it and chiming in, so we appreciate it. We miss you too, Miss Sandy. Okay, so what do you think, Darius?
No more questions. So,
is there anything you want to leave our audience with, sir?
What I just want to leave you guys with is just always remember to own your own lifestyle, because again, it's one thing that we say, it's another thing to do it. Yes. Because who has your best interests in mind? That's you. That's you and you only. So make sure you take the necessary time in order to have your solid foundation. Take the time to invest in yourself. Take the time to have positive thinking and positive self-talk, because it's all connected. Mindset is connected to your health, is connected to your wealth.
Yes, it is. So thank you all again for joining us live. We will see you next Tuesday live, and look out for our video on Thursday with VIP Financial. And
this Thursday.
this Thursday, sorry. And if there's anything that you need from us, hit us up in the comment section. We try to get to as many comments as we can because they come in fast and furious. But thank you all again for your support, for your love, for your encouragement. It keeps us going. And if anything, you guys just continue to challenge us to continue feeding ourselves with knowledge and information that we can continue to share with you. So if anything, again, thank you all for your time, and remember to own your own lifestyle.
Or someone else will.
Bye, guys.
See ya.